Well, good to see you again, and welcome back in your new role over at V Capital. So, uh, investors, before they put money down into high risk, high return ventures like the kind in your portfolio, I think you've got about 120 companies right now, right? $3.5 billion worth so far. There's differentiation. Once rates actually do start tightening, though, right, once the Fed really gets right down to it, what kind of impact potentially could that have on across the board on capital raising, on exits as well?
I think Fed action and global action, which will constrain some of the excess liquidity that we've seen and certainly impact markets worldwide, will definitely have a dampening effect. You've already seen a decline in public market valuations. I think you see it the toughest when you think about our part of the markets on the late stage pre-IPO companies and thinking about their strategy for capital raising going forward. That said, somewhat more difficult market environments also make people get down to brass tacks. And we certainly spend our time looking at areas of digitization that will help bring companies into the next century if they've been lagging. And certainly there are industries that have lagged. So ways to help companies get more efficient, that's the kind of areas where we look to invest, and efficiency is valued in tightening markets.
Sheila, so let me ask you, for the 120 companies in your portfolio, right? I'm curious, the options, right, for exit. It's either IPO or it's a trade sale. Trade sales, I mean, the good news is corporates out there, they are so flush with cash, it's not funny. But for the kinds of companies that you're interested in investing in, is that a good option or just a second best option?
I think it can be an entirely reasonable option. And whether it's buying a company outright or buying a stake, what we've seen is that for our portfolio companies, many times that engagements with a large corporate allows them to expand globally much faster than ever. Take a company like Icertis that helps with document and contract management technology, or take the merger you saw a few years ago between Gojek and Mocha, two unicorn types as opposed to a big corporate with a unicorn. There's many, many ways that these combinations can be interesting and effective. I think especially when you think about the fintech space, innovation has been tough for the big banks, but finding a great fintech company that's gotten halfway down the road is a place that they can jumpstart their own innovation.